Hello. The company being analyzed today is Zelio E-Mobility Limited, a profitable electric two-wheeler and three-wheeler manufacturer in India growing very fast. Today, we're going to analyze the company's financials, what it actually does, and its future growth plans. The company has some very fast growth plans. Let us start. First, we have a market capitalization of 569 CR. So it's a small cap company. It's pretty small. Current price of one share is 269 rupees. Price to earnings ratio is 27.4 times. Okay. Now let's go to the financials. Okay. So in fiscal year, we have the financials of the company in lakhs of rupees from fiscal year 2023 all the way to fiscal year 2025. So let's start with revenue. In fiscal year 2023, revenues were 5,125.07 lakh rupees. You can see lakhs, which can convert it to 51.25 CR. Then next year it rises to 94.42 CR. The next year in fiscal year 25 it rises to 172.18 crores. We convert them from lakhs to crores, adding a couple of decimal points. Then EBITDA, it's EBITDA positive. The company's EBITDA rose from 4 crores in fiscal year 2023 with a EBITDA margin of 7.84% all the way to 21 crores of EBITDA in fiscal year 25, 12.2% EBITDA margin. So the EBITDA margin actually rose. Then PAT or profit after tax, the net profit, rose from 3.05 crores in fiscal year 2023, as you can see, all the way to 16 crores in fiscal year 25, with a profit margin, net profit margin also rising from 5.96% to 9.29%. So, a lot of growth, a lot of profits, and profits have grown even faster as the profit margins have risen. Now, in cash flow wise, the company is actually cash flow positive according to their own reports. Now, pay attention to this. Net cash flow from operating activities, the bottommost figure, again in lakhs. So in fiscal year 25, see 31st March 25, 956 lakhs of cash flows, operating cash flows, 9.5 crores, positive operating cash flows. Then 30th September 2024. Okay, this is the half year, the first half, quarter one and quarter two combined. It produced 5.24 crores. And it's a part of this. So 31st March 2025, this 9.5 crores includes this 5.24 crores. But for comparison, in the latest H1, that is quarter one plus quarter two combined fiscal year 26, cash flows rose to 10.2 crores. So in H1 of fiscal year 2026 alone, not only did cash flows actually surpass the entire fiscal year 2025's cash flows, 10.2 crores compared to 9.56 crores. So it is even cash flow positive and cash flows are rising. That's pretty impressive. Now, what does the company actually do? India's fastest growing electric mobility company manufacturing and supplying stylish, slow speed two wheelers and rugged three wheelers for Bharat. So, two wheeler manufacturer and three wheeler manufacturer, electric, both electric and slow speed. Keyword slow speed. It is among the top three players in slow speed EV two wheeler industry. 70,000 plus units sold in the last 3 years combined. In the last 3 years, all the units sold have been more than 70,000. 4 to 5% market share in the slow speed two wheelers. Okay, 3x growth in revenue in from fiscal year 2023 alone. So in 2 years alone, 3x growth in revenue. One of the EV companies in India to remain profitable and 72,000 units. These are the number of two wheelers plus three wheelers it can manufacture 72,000 per annum, and it is expanding this to 1.2 lakh annum of units per year. So it's expanding its current capacity, and it has 335 dealers across 25 plus states and union territories. So we got some important info. Okay, two wheeler, three wheeler in the slow speed. Slow speed is important. We got the capacity 72,000 tons per annum, and we got some growth numbers, and we got the market share number also. Then look at this. Here we have how many units it actually sold. So in 2022, the company sold how much? 3,080 units, 1.1% market share. See, market share in low speed, LS, EVs, two wheelers. So market share in low speed EVs, which are two wheeler EVs. So 1.1% market share, 3,080 units. Then we go all the way to 2024, fiscal year 2024, it sold 20,900 units, massive growth, 3.8% market share. Finally, in 2025, its market share rose to 4.8% and it sold 38,400 units. Remember, 38,400 units. And its plans are to capture, first of all, 5 to 6% market share. And by fiscal year 2028, you see, fiscal year 2028, it wants to sell 1 lakh units, 1 lakh EVs, two wheelers plus three wheelers. No, sorry, only two wheelers, 1 lakh two wheelers per year by fiscal year 2028 and wants to capture 5 to 6% market share. Then you can see the urban market focus and Bharat market focus. So, urban market, it describes as metro and tier 1 cities, high speed, high speed two wheelers. But the Bharat market, it describes as tier 2 and tier 3 cities, low speed electric two wheelers. All right, more to be sold in urban market. These are estimates. These are overall India estimates. Okay, so the urban markets are set to dominate, grow a little faster, have more units sold. Zelio, a profitable outlier in India's electric vehicles two-wheeler landscape. So it's doing a slight comparison. It's showing that Ola Electric, massive company, it's, you can say, in not profitable. Ether is also not profitable, but Ether of course wants to go towards profitability. And Zelio, it's positioning itself as very, very profitable. So it's distinguishing itself is as a profitable EV manufacturer. Then, okay, so it's the vision. What is the vision of the company? First of all, look at this. Zelio targets a 35 to 40% CAGR in business scale and profitability, driven by no license, no registration EVs that promote customer delight, economic inclusion, and a greener future. So, the growth targets for the near term is 35 to 40% CAGR in both scale, that is revenues, and profits. So, it wants to grow its revenues and profits by 35 to 40% at least every year. That are the growth targets. Then product wise revenue bifurcation, fiscal year 23 to fiscal year 25. Let's go all the way to fiscal year 2025. 96.5% revenue. See, percentage of revenue. 96.5% revenue came from, see, electric two wheelers, and 1.87% revenue came from three wheelers. Others, others contributed 1.6%. What is others? Written here. Others includes batteries, spare parts, chargers, battery wire, wiper blade front using light. So there are other components that also sell. So 1.6% came from there, but electric two wheelers are the big one. Okay, electric two wheelers are the big one, but three wheelers are also there. Now, geographically diversified revenue, top 10 states by revenue bifurcation. So let's go to fiscal year 25. Let's look at the percentage only. Haryana contributed 26% of sales. 26%. But you can see it's a declining percentage. Fiscal year 23, Haryana contributed 55% of sales, declined to 41% of sales, and 26% of sales. Meanwhile, Uttar Pradesh has risen from 5.47% just 2 fiscal years back to 12.05% of total, what you can say, market share, total revenue coming from here. Then we have Gujarat third highest, West Bengal fourth highest, Madhya Pradesh fifth highest, Punjab 8.3%, Odisha 5.21%, Maharashtra 2.02%, Rajasthan 4.14%. All right, so it has got one state as the biggest, and then we got a few states very close in numbers: Gujarat, West Bengal, Maharashtra, sorry, Madhya Pradesh. Pretty geographically diversified. A bit of North India concentration, but North India is pretty big. We got some West Coast with Gujarat and Maharashtra. We got Rajasthan, North India, East India. Who we got in East India? I guess Odisha, kind of. Odisha is, yeah, West Coast. West Bengal is East Coast. Sorry, Odisha is East Coast. West Bengal is East Coast. Okay, pretty diversified. Then the conference call analysis. Now here we have the exact growth targets, the revenue targets they want to achieve. This is from the management themselves. Like we have mentioned that this financial year, we will be doing around approximately 260 crores of revenue. So they want to reach 260 crores of revenue in fiscal year 2026. And in fiscal year 25, they achieved 172 crores. So they want to go from 172 crores all the way to 260 crores because the market is also growing very fast, the EV market, the two wheelers. But we are focusing into doing more, and we will have better results when we will declare in the upcoming financial year. And the market size is substantially increasing every year. Slow speed and high speed, both industries are parallelly increasing every year. So, slow speed and high speed are both increasing. I did not know that slow speed and high speed are two different areas in the EV sector. So that's something new. And they say they will have better results when we will declare in the upcoming financial year. So I read this as, according to me, 260 crores was the target they presented. They feel they will do better than 260 crores. Then next financial year, we're expecting more than 350 to 400 crores. So fiscal year 2026, we are in quarter four of fiscal year 26, so it's about to end. They want to achieve 260 crores of revenue. And fiscal year 2027, they want to achieve 350 to 400 crores of revenue. Now, a question comes, how much is the average sale price per scooter per two wheeler? Per two wheeler, 40 to 45,000 rupees. 40 to 45,000 rupees is the average price. Fine. Now, look at this. The existing capacity of three wheelers in their plant is almost 2,000 units per annum. And the new unit that is going to be set up in Patan, their capacity will be almost 24,000 units per annum. They're expanding their three-wheeler capacity from 2,000 units per annum right now to 24,000 units per annum. All right. And their current capacity is 72,000 units. We covered that. They're planning to add 50,000 more units with their new plant by February. So by February 2026, a month away, they want to have this new plant where they're adding 50,000 units per annum. I think they're expanding their current plant to adding more capacity in the current plant, expanding from 72,000 units plus 50,000 units, expanding by a further 50,000 units. Then a question comes from a shareholder or an analyst asking about profit margins. So the answers will be given. So question comes, okay. So if you can just provide a better clarity about the margins part. How do you assess margin sustainability going forward? And what guidance can you give on the margin outlook for the coming years? So how are the profit margins going to be? Answer, like now we are setting plant in Odisha, it will reduce our logistics cost and number of dealers will increase because when we are present there in Odisha, the number of dealers will increase because we can give them faster delivery and we can provide servicing more on time. So numbers will increase in Odisha and our logistics cost will reduce. So they're setting up a plant in Odisha and the benefits there will be, first of all, lower logistics cost. Then more number of dealers will be there, and because more number of dealers will be there, they can give them faster delivery and servicing more on time. Because I think they're providing servicing training to the dealers, to their dealers they're providing servicing training for the, of course, the EVs, the two wheelers. So lower logistics cost, more number of dealers, faster delivery, and more servicing on time. Then our margins will improve more. Then we can spend more on R&D and D and branding and advertisement as well, and we can maintain same margins like previous. And maybe we can generate more margins because just like before, in numbers and quantity will increase, then margins will also increase. So they're banking on more scale to mean more profitability. So at least at the minimum, they're saying they can maintain the profit margins. Let's see what were the profit margins. Okay, EBITDA margins 12.2%. Profit after tax margin latest was 9.29%. Latest this whole fiscal year. So they say for at least with the new Odisha plant and as they're making more and more units, EV two wheelers and three wheelers, with that scale, increased scale, they can at least maintain margins and and if they're optimistic, they can even increase the profit margins as they have done before. So that was it. That was Zelio E-Mobility Limited growing from 162 crores, targeting 260 crores and above in just fiscal year 26, targeting 350 to 400 crores of revenue fiscal year 2027, hoping to capture more and more market share in the low speed electric two wheelers, expanding capacity in three wheelers. According to their own reports, they are in fact like cash flow positive, which is pretty impressive actually. Having 9.5 crores. of net operating cash flows in fiscal year 2025, then in the first two quarters of fiscal year 26 alone, having 10.2 crores of operating cash flows, I guess that's pretty impressive. Let us see. The market is competitive, market is growing, but they have showcased better and better profitability. Let us see how Zelio e-mobility does in the future.